I'm meeting with a couple today who want to discuss their credit score and the impact on their mortgage.
Thanks for meeting with us, Tracy. One question we had is, what is a credit score and how does it really affect us?
Well, a credit score is also referred to as a beacon score. And that is really an indication of the history of your credit and how you've paid in the past. So there's two different types of credit. There's revolving credit, like your Visas, your MasterCards, your lines of credit, things like that you're paying on a monthly basis, as well as installment credit, maybe a lease on a vehicle or an auto loan. And the scores run anywhere from a very low score, meaning you're a very poor credit risk of 350, up to an excellent credit score and a really good risk of 800. So depending on your score, it will allow you to borrow a certain amount of money, have a smaller down payment, and also to have a better rate.
Now that we know about our credit score, the next question that I have is, my wife here has a love of shoes. I'm wondering, how is that going to affect our credit score?
Right. And also whether your report is separate or together, and whether how their scores interact and things like that. Well, definitely everyone has their own credit scores, and what's really important is that your wife would have her own credit report and her own credit card, so that she would, in her own name, and that would affect her negatively, not necessarily you. But as far as the lenders are concerned, you're looked at jointly when you apply. So she may have to curb a little bit on the spending. The big key though, and all joking aside, is that she has to just make sure that the bills are paid on a regular and frequent basis. So paying within the 30 days is very, very important. So how your score works is that it attaches a number to it. So an R1 means that it's paid within 30 days, and R2 means 31 to 60. And lenders look at that history of how you pay and making sure that's paid on time. So that's the big key.
What do we do if, say, my husband here has a really low credit score and I have a high one?
That's an excellent question as well. So some lenders will actually look at the two of you together and average your score, where other lenders will only look at who is the lowest score and rate based on that, and other lenders will look at whoever makes the most money and whatever credit score they have. So there's a few variables that are attached, but generally having a score of 600 or greater will allow you to get the premium rates that are out there.
Tracy, what are the different things that would affect our score? I've heard in the past that there's a couple different things that affect it. So what are they?
There's not an exact science to it, and there's two agencies that are primarily used by the mortgage lenders. So one is being Equifax and the other one being TransUnion. And they work through a number of segments. So paying on time is a very huge thing. So again, as I said, making sure that even if you make minimum payments, as long as you're paying on the due date, very, very important. The different mix of cards, like how many you have, how much debt is outstanding, is another big key factor. So if you have more than 75% of your credit limit on a card outstanding, that can be an issue. So for example, on a 10,000 card, you have 7,500 or more outstanding, it starts to affect your score and bring it down. And another piece that a lot of people don't consider is inquiries into your account. So you're going out shopping and you're at Leon's or the Brick, and your don't pay a cent event comes up, and you've got to get that stuff. And what ends up happening is that every time you use one of those department stores and or companies, they're going to do an inquiry into your credit in order to be able to see that you're able to afford their savings.
And every time they do an inquiry, it drops our score?
It has an impact on the rating of the score, and definitely has an impact on it that way.
That's good to know.
Yeah.
Pay off that furniture.
Absolutely.
The length of time that you have established credit, so if you've been, people who are newer to the country, won't necessarily affect yourselves, you've been here for quite some time, but people who are newer to the country and haven't maybe established a long period of credit here in our country, that can have an impact. But a lot of times I recommend, even for students, people just turning 18, to get a credit card and be able to start paying it off, get in some good habits, and that establishes good debt for them as well. So that's really important. The last thing that sort of impacts your score is the credit mix and how often you use your cards. And so ones that have been in existence for a long time and you're not using them, you should get rid of them and cancel and clean them up, because they show as available credit. Because how the Bureau looks at it is, you have all these cards here, and even if you're not using them, you have the potential to use them and incur debt. So they look at it from that perspective.
So what about some strategies to improve our credit score?
Great question. And again, there's a couple of things that will really help from that perspective. One being making sure your balances aren't more than 75% of the limit of your card. So that's a big key. Making sure your balance is paid by the 30 days. So that's also a big component. Making sure you pay attention to how many inquiries are going in your account. So every time you get a cell phone or you applying for a new card, or Home Depot's got that special where they'll give you a discount on your purchase for that day by getting another card, that has a big impact as well.
Does that include shoe stores as well?
Absolutely. Yeah, it's good to know. And making sure that you cancel cards that are inactive. And you just want to make sure though that if you have, from a history perspective, that you have cards that you've been using for a long period of time, don't cancel those. Make sure that, because that will definitely help your rate from that perspective. Yeah.
What would be a good average amount of cards or amount of debt to be holding between the two of us that wouldn't be too much, but would be, you know, not enough that it would affect us negatively?
I think it comes positive for it. It's really a personal decision, but partly you want to have 3 active, what they call trade lines, which is really credit of some sort, but that could be vehicles as well as credit cards. It doesn't have to be just that, or it could be history of a student loan or things of that nature.
Tracy, since we're considering getting a mortgage, can you just let me know exactly how our credit score is going to affect the rate that we're eligible for?
Yeah, absolutely. So on a good credit score, let's say you're making household income about $80,000 a year. Your credit score is 680, and we'll use an example of a mortgage of $250,000, 5-year fixed term amortized over 25 years, and I just used an average rate about 5.59%. Your monthly payment would be $1,539.10.
Okay.
Now, if you use exactly that same example, and yet your credit score is 565, then your payment's going to be $1,789.80. So it has a big impact on the rate. So maintaining your credit and taking care of your credit is extremely important.
Thank you very much. This has been very helpful. I know I learned a lot, and we'll definitely go home and check our scores and make sure everything's okay.
Thank you very much.
Excellent.